I'm going to give it just another minute or two to let a few more participants get logged in before we get started. All right, good morning, everyone, and welcome to the Hurricane Helene update, impact to taxpayers as of today, October 17th, presented by Symphona. We understand that a lot of our clients and many of our taxpayers across the state of Georgia are feeling and will continue to feel the aftermath of Hurricane Helene for quite some time, both financially and emotionally. Today's presentation is really meant to be educational based on resources that are available out there right now, as well as what the tax law says about deducting losses or receiving payments related to this type of disaster. To introduce myself, my name is Brandy Dykes. I work for Symphona in our Dublin office. I am a director in our Tax and Business Solutions department. I primarily focus on real estate, financial institutions, medical and professional service practices, and high net worth individuals. A little more of my background, I was a board member for the Heart of Georgia chapter of the Georgia Society of CPAs from 2019 to 2022, and then also served on the Leadership Dublin Lawrence Board from 2018 to 2021.
Hi everyone, my name's Molly Traylor and I'm a senior tax accountant here at Symphona's Dublin office. My primary industries I work with are real estate, construction, healthcare, and farming. And I am looking forward to sharing some information today that could help alleviate some of the financial burden caused by this hurricane. In today's presentation, we're going to be talking about hurricane tax extensions, record keeping, tax relief options, disaster loans, casualty losses, property exchanges and replacement, disaster expenses, early retirement withdrawal, and timber and agriculture loss. The IRS issued a press release at the beginning of this month, mainly in regards to extending tax deadlines. There will probably be more to come, but this is what we have for now. A few paragraphs on tax relief were also mentioned in this press release, referencing publications 547 and 525. So we'll be touching on those publications specifically, as well as some others that are also relevant to this hurricane. And we'll be showing you how to strategize. If you live outside of these states and your books and records are not maintained in a qualified disaster area, you will need to consult with your tax advisor. I'd also like to add that affected states have also chosen to extend state returns to the same deadline as the federal extension. So the new deadline is May 1st of 2025, and this covers all types of returns, so individuals, partnerships, S corps, etc. This also includes FBARs and payroll and excise tax returns due after the hurricane. Balances due for 2023 are not eligible for penalty relief. If you didn't make an extension payment that was due earlier this year, that will be a problem and you'll need to contact us as soon as possible. Estimated tax payments for Q4 2024, Q1 2025, and Q2 2025 are also included in this May 1st deadline. Alabama, Georgia, North Carolina, South Carolina, Florida, and parts of Tennessee and Virginia have also extended the deadline to May 1st for state returns. This isn't only for if you conduct your business or live in those states. This extension also applies to you if your books and records are maintained in these states. So if you're a Symphona client, you do qualify for this extension. However, in the instance where your books and records are maintained in a disaster zone, but you live outside of that disaster zone or conduct business outside of that disaster zone, we will have to submit a power of attorney to the IRS in order to claim this extension on your behalf. So keep an eye out for emails requesting that you sign Form 2848. We still want to stress being proactive about getting your documentation to us. Even though the deadline is being extended to May 1st, this deadline is going to be congruent with spring tax season. So we don't want you to enter 2025 still stressing about 2023 taxes. The most important thing I want to stress is keeping a record of any documentation related to hurricane recovery. This documentation includes things like property destroyed by the hurricane, insurance proceeds, closing documents if you happen to sell the damaged property, reimbursements from organizations like FEMA, expenses related to repairing and replacing property, which properties were destroyed or damaged, and the original cost from when you first purchased the property if you haven't already provided that to your accountant in the past. Make sure you are taking pictures of everything, not just for us, but a lot of these grants are going to rely on the pictures you take of any damage because the government doesn't have the manpower right now to do an assessment on everyone. The better you document, the easier it will be for us to help you take full advantage of the tax relief available to you. So what should you do if you lost your records in the hurricane? There are a few options. The first option is viewing transcripts on the IRS website. Just go to File and then get your tax record, and it will prompt you to make an account. This will give you a summary of your tax return information for the current year and the past 6 years. You can also request a full copy of your tax return from the IRS, including attachments such as your W-2 or your 1099. However, you'll also have to submit Form 4506 and pay a $43 fee. There's also an option to give your accountant access to your records. We would just need you to sign another power of attorney. This would probably be the best option because you wouldn't have to gather all of the documentation for your accountant.
Thank you, Molly. Going to swap gears a little bit here now and talk about ways to potentially get cash back in your pocket to help fund some of these hardships, fund repairs, different things. So the first one we're going to hit on is disaster relief payments. So these are government relief payments that are typically considered non-taxable. They must be deemed reasonable and necessary for personal or family living expenses or burial expenses and or repair or rehabilitate the home or its contents. So this could be appliances, this could be furniture, this could be clothing, anything in the home that got damaged during the disaster. As I'm sure many of you have heard at this point, the first place to go is to visit the FEMA website to be able to begin that application and determine if you are eligible for any related federal assistance for expenses or damages. And we've got the website listed there on the slide for you. The next is insurance payments. So there are probably a long line of people in front of you contacting their insurance agents, working on getting claims filed. So I would, practice patience. As much as that, you don't want to hear that, but there's a long list, and they may be working in order of most damage, or it could be first come, first serve. So get on the list as quickly as possible. One thing I want to note about insurance payments is that these could be taxable, especially if it is for business property, business equipment that has been damaged. For example, if you have, in the case of a farmer, if you have some equipment that was totally damaged during the hurricane or partially damaged during the hurricane that you're able to file a claim on and get proceeds for, let's say you have $25,000 of proceeds, insurance proceeds to replace or repair that, and you decide not to replace that piece of equipment, but you've had it for quite some time and it's fully depreciated. If it's fully depreciated, that means that your cost basis in that equipment is zero. So if you have, and you've gotten a tax benefit on that in a prior year, If you receive $25,000 of insurance proceeds and you do not replace that equipment, that essentially is taxable income to you that you'll have to claim on your personal return. As always, consult with your tax advisor to know whether or not all or a portion of those proceeds will be taxable. Typically for non-personal assets, that's not going to incur taxability but for business assets, whether you file a separate business return or if you have rental property, if you have a farm, if you have what's called a Schedule C where you're self-employed, those are going to potentially give some heavier tax burden. Other ways outside of insurance and FEMA grants to get money would be this SBA and EIDL loans. So SBA loans can provide up to $2 million for businesses to repair or replace damaged real estate, machinery, equipment, inventory, and other business assets. This is available to businesses of all size as well as private nonprofits. EIDL loans are a little bit differently. You do have to use those funds specifically for rent, payroll, or other business operating expenses. That can be found on the SBA website as well. And those are going to be likely a little bit harder to get eligibility for. Small business owners that use their home for their business can also access up to $200,000 to repair or replace real estate and access up to $40,000 for personal property. Again, that's going to be equipment, furniture, if you are using your home for business purposes. Go to the SBA website if you need that funding to determine eligibility. Interest rates here are usually low, which is definitely favorable for anyone who may need to use those. The other thing that you may be able to get would be an SBA grant. Those, like the FEMA grants, are typically considered non-taxable. However, there's more hoops you have to jump through to be able to qualify to get that funding. Now, swapping gears a little bit on, what we're going to talk about now is ways to strategize for, potentially 2023, 2024. So looking at casualty losses, which probably almost everyone in the state of Georgia has experienced some type of casualty loss at this point from Hurricane Helene, as well as the neighboring states. So the definition of a casualty loss is a loss resulting from destruction or damage of property due to unforeseen, unexpected, or unusual events such as flood, hurricane, fire, tornado, etc. So the amount of the loss is based on what is not reimbursed or covered by insurance. One good thing for our taxpayer base is that this loss can be deducted either on the current year, the loss year return, which would be tax year 2024, or it can be carried back to 2023. So it's very important to consider whether or not, what year is going to provide the best tax advantage for you. Federal declared qualified disaster losses have varying deduction rules, but again, they're more beneficial for the taxpayer. So if it is a federal declared disaster, that casualty loss is not subject to the 10% AGI limitation. You can deduct the loss without itemizing your deductions. You may be able to deduct the loss without itemizing your deductions, and you reduce the casualty by $500 per incident. So again, they're calculated separately per incident. So in the case of Florida residents, there may be, at this point for 2024, 3 different incidences that you would be able to claim casualty loss on, whether that be Hurricane Debbie, Hurricane Helene, or Hurricane Milton. So just again, consult with your tax advisor. I do want to note at this time, the instructions for Form 4684, which is where you claim the casualty loss and how that's calculated, those instructions have a running list of specific disasters declared by the president. So right now, Hurricane Helene is not included on that list. However, it is our best interpretation of the presidential announcement that was issued on October 1st that this disaster will be added to the qualified disaster list based on it being a major disaster in the state of Georgia and other states. So today's presentation is going to be based on that understanding or expectation that this will qualify as a federal declared qualified disaster loss. Want to walk through an example of calculating the casualty loss. There's two different types. It can be considered a personal casualty loss or a business casualty loss. The rules are very similar. So in this example, your home has an original cost basis of $144,800. Of that amount, $14,500 is for land. The home was completely destroyed by Hurricane Helene. The fair market value of the property before Helene was $180,000, and you can see the breakdown there for what was the home versus what was the land. The fair market value after Helene is just the land value of the $35,000. Insurance has reimbursed $130,000. So what really is your casualty loss deduction? So for casualty losses, you get to deduct the lesser of the adjusted basis of your property or the change in fair market value of the property before and after the disaster. So for our example, our adjusted basis is $144,800. Fair market value before the incident was $180,000 versus after the incident, it's only $35,000. So the decrease in your fair market value is 145. The lesser of those two is your basis, which is $144,800. You had insurance proceeds of 130, which again reduces the amount of your loss and puts your loss after reimbursement at $14,800. We do have to deduct the $500 per incident on casualty losses. So you would have $14,300 worth of personal loss that you can claim either on your 2023 or 2024 tax return. IRS Publication 584 has some additional information that you may want to reference when documenting deductible losses. There's some worksheets included in there that kind of help you inventory different things, parts of your home, inventory things in your home if you have experienced a substantial loss. Using the same example above, or the same numbers from the example above, but swapping this over to be a business loss, business property rather than personal property, the calculation is pretty well the same. However, there is no $500 deduction that you have to apply on the loss. So in this case, it's a little bit higher. This would be reported on Section B of Form 4864, or it gets deducted on a Schedule F, Schedule C, or Schedule E of your personal return if it's business property. If you're in a higher income tax bracket for 2023 than you would be for 2024, it may be advantageous to go back and amend your personal return for 2023 or your business return for 2023 to claim those deductions in that tax year. Those, you may not know what those are yet because, the cleanup has not been completed. Insurance proceeds may not have come through. So just know this is something that is going to take time to be able to have all the appropriate documentation and data and be able to make that analysis. But when you have everything completed, I definitely recommend consulting with your tax advisor. And I'll pass back to Molly.
If you lost business property from the hurricane and either sell that property or receive insurance proceeds to rebuild, you might have a gain depending on the basis of your building. If insurance or selling proceeds exceeds the adjusted basis of the building. Your adjusted basis is typically going to be your purchase price minus depreciation. In this case, you might need to talk with one of us about performing a 1033 exchange. This allows you to defer gains generated when replacing the destroyed property. Two rules you need to know if you want to qualify for this. You have to replace it with similar property, so you can't replace a tractor with a van. It has to be building for building, vehicle for vehicle. You get the gist. And this property must be purchased within 2 years after the fiscal year that this happened. If insurance reimburses a taxpayer for property lost, it must be used towards the replacement property to qualify for the 1033 exchange. Who is this going to affect the most? If you own property that you've been reimbursed for that's been fully depreciated, you're likely going to have a relatively large gain. For example, if you're a farmer and you lost a tractor that you've owned for a very long time and it's been mostly or fully depreciated, the adjusted basis is going to be very low, meaning that Any insurance reimbursements you receive will generate a gain. I want to emphasize this. Please consult with us before attempting a 1033 exchange. There are a lot of odd stipulations anytime you perform a 1033 or a 1031, and we want to make sure that you take all of the right steps so that you don't accidentally disqualify yourself from getting to take advantage of this. Another way we can offset gains associated with reimbursements from insurance or selling proceeds is applying Section 179 to replacement property, which allows you to depreciate 100% of the cost of certain assets in the year that it's purchased. Section 179 can also be used on new property acquired in a 1033 exchange. Assets that qualify for 179 are equipment and machinery, office furniture, computers and software, vehicles over 6,000 pounds, and improvements to non-residential property such as fire alarms, security systems, and a roof. Assets that do not qualify for a 100% 179 deduction would be land and new building construction, intangibles such as goodwill and patents, property used outside of the US, assets with a recovery period of over 15 years, and vehicles under 6,000 pounds or less. Certain vehicles as well, such as luxury vehicles, have a maximum deduction of around $11,000. There's some additional limitations to Section 179 as well, so make sure you consult with your accountant. So for businesses, Section 198A of the Internal Revenue Code allows taxpayers to deduct certain expenses related to disaster relief that would normally be capitalized. Some examples of these are the removal of debris or the demolition of affected property, repairs to damaged property, and other expenses related to cleanup, replacement, and restoration. It's vital that you keep a record of any financial activity related to the damage from this hurricane. These expenses are deducted as ordinary expenses and classified as other deductions on your tax return. If you sustained an economic loss due to the hurricane, you can potentially distribute up to $22,000 per disaster without having to face the 10% tax penalty for early retirement withdrawal. What does the IRS define as an economic loss? It's a loss, damage to, or destruction of real or personal property from fire, flooding, looting, vandalism, theft, wind, or other cause, or a loss related to displacement of your home. It's still taxable on your 1040 if it's not a Roth, but you can elect to have it spread out over 3 years. Here are the key things you need to know about this. The IRS publication on economic losses for a qualified disaster states that distributions are permitted without regard to your need or the actual amount of your economic loss. So the IRS is not considering the cost of this economic damage, and they don't care how you spend it. So it does not have to be put towards hurricane-related damage. You can put it towards anything. So if you've been wanting to take out an early withdrawal from a retirement account and did have damage to your property from the hurricane, even if the damage was minimal, now's the time to withdraw. Make sure that you consult with us before you withdraw retirement. The reason I say this is because there are a lot of stipulations with retirement accounts, such as what you have vested. You're not fully vested with your current company. You may not want to withdraw yet. There's also a potential for this limit to increase to 100,000 like it did back in 2020. We are staying up to date with the IRS announcements to see if they choose to increase it.
Thank you, Molly. Going to swap gears a little bit now and talk about the timber and agriculture industries. A lot of our client base and a lot of Georgia residents have been heavily impacted because a lot of them have timberland or are involved in agriculture. So, what does this look like for those farmers, for those timber owners? Section 194 for reforestation allows you to deduct typically up to $10,000 of reforestation expenses, and the remainder of those expenses has to be amortized. However, Section 198A, as Molly mentioned earlier, with the qualified disaster expenses, will allow you to deduct those replanting expenses. You can also perform a 1033 exchange for timber. I don't see that being very common, but I wanted to mention it. Very important that you gather relevant documentation on the cost of timber you lost, as well as when it was purchased. Cost of timber, so this is going to be specifically anything that you have not already reduced on reduced your taxable income for in a prior year. So if your basis, you're thinking, well, I replanted this, tract of timber for $50,000, that, depending on when it was done, may have already been deducted or amortized out, and your basis is actually going to be zero. If you've inherited the property, if you've inherited that timber within the last 2 or 3 years, that's good news, because that means that your fair market value on those tracts of timber is likely pretty in line with your basis, aside from the little bit of growth and value that would have increased over those 2 or 3 years, or from the time of inheritance to now. One thing we wanted to mention is the forestry grants that you can consult with your county forester on for more information. Definitely take pictures of any timber damage that you have. The best way to determine fair market value on that timber is going to be through appraisals, and the people doing those timber appraisals, they're just like the insurance agents, have kind of a long line to work through. So being able to document that and provide pictures of immediately after the disaster is going to be key. I do want to mention there is a proposed bill that was introduced to Congress back in 2023 that would allow timber owners to recognize the loss on their uncut timber due to fire, storm, severe drought, etc., in the amount of the appraised value of their timber immediately before the loss, less any salvage value. So, but the bill does say in order to be eligible for that loss, the timber must be reforested within a specified year period. Right now, that proposed bill has a 5-year window on it. So how would that be beneficial? If you are a timber owner and your basis in that property, or your basis in that timber is zero, per the current casualty loss rules, you take the lesser of the change in fair market value or your basis. So if your basis is zero, you're not going to get a casualty loss deduction outside of what you have as far as cleanup expenses, tree removal, those type things. With this proposed bill, you could actually deduct the fair market value as your casualty loss. Again, it's not passed, it's just been proposed. It's not passing either side, but I wanted to at least make that note for everyone. As I mentioned before, the current law is not very favorable for those landowners because many, their basis is zero. The best way to determine the accurate fair market value is through an appraisal. Again, make sure you're documenting through pictures. There may be some state grants or credits to become available, and I'll touch on the credits at the end of the presentation. There's also a tree assistance program that helps with replanting trees due to disaster. So again, reach out to the Forestry Commission and see what is available currently, and continue tracking this, because, and we'll do the same. We expect to see some additional either funding or grants or credits available to help those burdened with such a loss. Agriculture. So right now, the Department of Agriculture is estimating around $6.46 billion in lost revenue for the agriculture and forestry industries, with about half that amount, $3.2 billion, being a direct impact on farmers and timber owners. So farmers can deduct losses from damaged crops, livestock, equipment, and buildings as a result of the federally declared disaster. Similar rules are applied to ag losses and as to timber losses for the calculation of the amount claimable on Form 4684. One thing that would be helpful or may be helpful for our taxpayers is if you do receive crop insurance as a reimbursement for a crop that you're not going to be able to harvest, then you may be able to defer that crop insurance payment. So for, peanuts that you start harvesting in September, October, later in the year, you may not typically receive payment on that until December, January for it's going to flow over into 2 different calendar years. So if that is the case, if your normal flow of income is going to be in 2 different calendar years, you could actually defer some of those crop insurance proceeds to apply to the following year. Again, that may or may not be tax advantageous, so please consult with your tax advisor. If the hurricane has forced a taxpayer to sell more livestock than usual, similar to the crop insurance, you can also defer reporting that gain from that sale for 1 year. So I've talked to several farmers around that have, herds of livestock, and the trees have damaged their fencing or corrals to the point where it's going to take months to repair them. And in some cases, those farmers are not interested in doing those repairs. So they've decided to sell most or all of their cattle or other livestock. And in that case, that would be deemed, you're selling more than usual. So it may be tax advantageous for you to report or defer some of that income out, into 2025. Additionally, there's the 3-year income averaging rule that may be applied to help reduce tax burden for heavily fluctuating income and loss years, specifically for agriculture taxpayers. Hurricane replanting of orchards, vineyards, nursery trees allow for expensing of those costs for restoring the farm as well. There's a lot of disaster relief programs out there. The Emergency Conservation Program aids in restoring farmland. Livestock Indemnity Program provides compensation for livestock deaths. I highly advise contacting your local farm service agency to determine how to begin the applications process and what assistance may be available for you. There's a pretty long list out there on their website. I do want to make mention that legislative requests are being made for federal funding, specifically in the form of block grants, which would allow the state of Georgia to be able to better allocate how those funds are dispersed. If this money is received, it can be ordinary or capital income, depending on eligibility. And I know that in listening to the various press conferences, this is something that the Georgia legislative bodies are pushing pretty hard to get funding specifically for agriculture, timber, because that is a top earner as far as the Georgia economy. Also want to mention there is a relief fund for farmers out there. It's called Weathered But Strong. These applications are scheduled to launch in November. I don't have a specific date, but it is scheduled to launch in November. There are a lot of organizations that have come together to contribute to that. So again, we'll have the website for that at the end of the slide. In the past, the state of Georgia has had some pretty positive responses when we've had losses with Hurricane Michael, other hurricanes, major drought. So some of those programs that have been enacted previously to help alleviate the financial burden is the Georgia Hurricane Disaster Tax Credit Relief Program that was released with Hurricane Michael. There have been recovery funds for farmers and timberland owners offering grants and loans to replace damaged infrastructure and resources. There was a Georgia timber tax credit. I believe that was with Hurricane Michael as well, or around that time period. And then the Georgia Department of Agriculture and Georgia Forestry Commission, they are coordinating recovery efforts and providing assistance with funding, debris removal, conservation practices, the list goes on there. So please be on the lookout, follow these state websites if you think that there may be something that you could benefit from. Molly?
Just to reiterate some things, FEMA grants are not taxable, but it will reduce the amount of casualty loss you can take. So please make sure to hold on to documentation showing how much you received from FEMA, as well as any other types of grants. Penalties and interest for payments due October 1st or later are also being extended to May 1st. The same goes for quarterly payments and tax filings. This extension does not apply to quarterly payments that were due earlier this year for quarters 1 and 2. So if you're behind on making quarterly payments, let's discuss how we can get you caught up. Documentation is the most important thing you can do right now. Insurance reimbursements and grants will reduce your losses claimed, but you can elect to report this either on your 2023 or 2024 tax return. Consult with your accountant on possible liabilities generated by insurance recovery. As far as timber loss, your first line of contact should be your local county forester. The market is very saturated right now with so many people trying to apply for these grants. GFC just announced that there's an estimated 1.28 billion of timber resource impact in Georgia. So it's better to contact them sooner rather than later. And that is all we have for y'all. We have some moderators, I think, available to answer questions in the chat. And there's some resources available if you'd like to stay informed on any updates we hear. You can check out our blog and our newsletter on the Symfana website, which I have links to here. You can also email me or Brandy or anyone else at our office if you have any questions. And I've also added some references here to the IRS publications as well as some others. The most important publications will be 525 and 547 since those were referenced in the recent IRS press release. And we just want to say thank you for joining us today. I know that a lot of small businesses and individuals were affected by this, and my condolences go out to anyone who's been heavily affected by this storm. We know this is a frustrating time for everyone in terms of gathering tax documentation and applying for grants. We will continue to keep an eye out for IRS and state announcements on what tax relief is being made available. But that's all we have for you today. Feel free to reach out to us if you would like for us to help you create a plan and strategizing for your taxes.
Thank you all so much. Also, for those still on the call, any questions unanswered in the chat, we will send you an email or feel free to call or email us directly.